All right, welcome to the weekly market report. I'm the Wall Street Yardie. We're going to jump right in. First thing we want to look at today, as we've been looking at the last couple of weeks, I've been bringing it to you on the chart, but I wanted to give you a different view here today for a couple of reasons. Crude oil is a very key thing, especially for us right now in the market, especially with what's going on in the Strait of Hormuz and the conflict we have going on with Iran right now. Right now, there's no oil flowing through the Strait. The Strait controls 20% of the world's oil. Okay, so this is huge. It affects everybody, mostly Europe, mostly Asia, because that's where the oil flows on that side. So when we look at that, what we're really paying attention to with the Strait is this thing they call ice Brent crude. So this is the crude that is pulled out of the Middle East, Saudi Arabia, and those countries, and this is the oil that's stuck right now in the Persian Gulf and cannot get through the Strait to get delivered to the various places it needs to go within Europe and Asia. Right now, as you can see, there's a difference between this Brent crude and this other crude, which is WTI, West Texas crude is what this is. This crude comes out of the U.S. This is the oil that the U.S. produces and then ships to their various buyers. So the Brent crude, as you can see, is about $14 higher. This is as of Friday afternoon. But what I really wanted to focus on this chart was the futures. So we really look at these. These is the futures of the oil. Okay. So what we're seeing here is that as time goes on, as we go from May to July to June to August, these futures, the prices, are kind of going down. It's kind of dropping. So that tells me that, and these two are a little backwards. So we go from 112 to 106 to 100, all the way down to 95. Tells me that the futures is predicting that the war is not going to last more than these 4 or 5 months that we're looking out here, right? So, and then if you come over to the U.S. crude oil, right, you're seeing here this staying above 90, right? These are both problematic, even though the price is dropping. It's telling us that what we have going on right now in the market is going to last for a little while, right? So we don't want to be too gung-ho and say, oh yeah, this is the bottom, and jump in and buy a bunch of stuff right away. This is time for you to prepare, do your research, find those stocks that you love. The Wall Street Yardie app is very, very close. But I think we have another week before we can make an announcement. But that's going to be a place where you can start doing some research, finding some value. Some of the big names right now, the Nvidias, the Microsoft, those are really undervalued given the big drops they've had. So you want to pay attention to those, but we also want to wait till kind of this crude situation, this oil situation is settled out of Iran. So wanted to bring this to you because it's forward looking, right? So instead of just looking at the chart and some price, we can see that the market itself is still pricing us above 90. Where we want to see this is we really want to see this oil price drop, get back below 80, and then everything is back to normal, if you will, for the market. So if we can get this back down to 80 and we can see futures still getting back into the 80s, that's how you know we're starting to make the turn and that the conflict is not having as an effect on the market going forward. Remember, the market's always forward looking. Doesn't care what you did for it yesterday. Wants to know what you're going to do for it tomorrow. So this is another reason we want to look at the futures and see kind of what's going on here with the crude. So with that said, let's flip on over to the VIX because we want to also measure how scared the market is, right? So the VIX is the fear gauge of the market. So this is where, when you look at this is going to measure the fear for the next 30 days of the S&P 500. Remember, the S&P 500 is the largest companies in the U.S., 500 largest companies in the U.S. by market cap. So that's what they're worth, right? So what we're going to do here is we're going to pay attention to the VIX. We want to see VIX, in the good times, VIX is going to be below 20. We want to see VIX start dropping back below 23 before we start to see any kind of turnaround. You can see here, VIX has been well above this 23 level all the last week and the week before. And this is what's bringing the pain to the market. When there's this much fear in the market, people aren't investing. They're not putting money to work. They're not putting money into the stocks that you love. So those stocks, if they're not getting any new investment, they will not grow. It's a supply and demand situation. So you want to make sure that there's demand for the thing that you're looking to sell or looking to invest in. And right now, there's just no demand coming into the market. In fact, they're looking to sell and get out and wait to see what happens with the war, right? So we're gonna keep an eye on the VIX throughout the week. If you start to see the VIX drop below 23 here, then we might, look at some things going on as far as a bullish move. And then we can pay attention to that and decide when and where we want to jump into our movement, right? So not giving you advice per se. This is really just education. I'm giving you the places to watch, the things to look for, so that you know and you can make a decision on your own as a trader or as an investor of when you want to put your money to work, okay? So next thing, of course, S&P 500. Little excited about this chart because last week I did predict this drop, right? So when we're looking at this chart here, last week I had this drop, and my target last week was 650.72. We went well below that, okay? So, the week started off, it wasn't looking too good for my prediction. We went up a little bit, but what I want you to pay attention, these 2 days that we did go up, see here, the volume, if you're looking at the bottom of the screen, the volume now did not get back above our average. So that was a weak move up. The buyers weren't really stepping in to push anything higher. And then we had the Fed meeting was coming up the next day. This was Tuesday. And then Wednesday we had the Fed meeting, and that's when we took the turn to the downside. So I kind of saw some of that coming. I dropped my prediction there. Look where it went. It went down to our level. We actually closed below our level, which is not good, especially with this huge volume. I almost want to put another down week ahead of it, given some of the news we saw here over the weekend. So I'm going to go ahead and I'm going to use the same length line. If you hadn't been watching before, what I do here is I just take a trend line from previous moves down. As you can see here, we're just matching up the lines, right? And the angle. So that's what we're doing here. So I'm just going to drop the angle right here. I'm going to start it here from the close. So we're looking at 634, 635, call it, as our next target for next week. So that's what we're looking at with the SP 500. Moving on to the QQQs. Actually, before we get there, this is my secret chart that I shared last time. What I'm doing here is I'm looking at the top 8 companies in the S&P 500 and seeing how they're trending. Why I picked these 8 is they control 35 to 40% of the weight or the movement in the S&P, the market price of the S&P. So if these things are trending down, as you can see here, I have a very big downtrend line. We haven't come back above it yet. Came all the way down, settled into this range, and now we broke below the range. And as you can see here, this is another reason to give me a little confidence. We might go a little lower. We had high volume here, and we had a very big red candle here. So maybe we get down to here, this 2,000 level for this. The price per se doesn't matter. What we want to watch with this secret chart is really, can these big boys start pushing the price back up, right? So these are the biggest movers in the market. If all of these stocks together can start making a trend and turn higher, that's going to be our biggest signal that S&P 500 is getting ready to make a turn for the upside, right? For now, it's very bearish. It's very downward moving. So you want to be careful. We have some really good support here at this level. So I want to see what happens there. If we break through, then it's going to be a lot more pain. We're probably going to drop quite a bit after that. But we really want to just kind of wait it out this week, see what happens. There shouldn't be too much big news coming. The biggest news I want to pay attention to this week is what's going on with the conflict in Iran and what's going on with the price of oil. So if those things start to turn in our favor, then, maybe we can start looking at some things. But till we really close above this level here, which is 21.15, and then this other level here, which is about 21.60, until we can get back above here and start making higher lows and higher highs, I'm not really interested in anything to go and buy into the market. I'm going to sit on cash, or maybe options trading, so maybe I'll do some puts or some other strategies to collect some income during that time. If you want to learn about some of those strategies, visit wallstreetyardie.com. The blog has a lot of good information on the different strategies to generate cash, especially in a market like this, so that you can continue to grow your portfolio even though the overall market is not looking very bullish or very positive at the moment, right? So all right, so with that, QQQ. So QQQ, we hit our target on QQQ as well. I thought it was going to come back down. So this is NASDAQ 100, top 100 stocks in the NASDAQ index. right? So these are mostly tech stocks. So this shouldn't be that surprising. We've been coming down, settled in, and dropped. So big drop again just on Friday. So a lot of those same stocks we were just talking about, the top 8, are also in this same kind of ETF. So it's not surprising that you see it, but it's a slight difference here with the NASDAQ. As we came down to our lower level here, we breached it with this lower wick, but then at the close, we closed back above the level. So this level is now acting as support. We see it played support back here back in November. It played resistance here as it pushed price back down, but that was also the level we broke out. Once we got back up above it, we broke out and went much higher to the all-time high. So it's a pretty important level. If this week we come in and we close below this level, then we're going to be headed quite lower, right? So we're going to be maybe looking at 560 at that point, and I'll drop that level on the chart next week, or maybe during the midweek, depending on how far we go. All right, so what I'm going to do with the QQQ is I'm going to make a little prediction here. I don't think we're going to get all the way down here to this gap level that I have, 565. There's a gap back here. This is where I drew this line from, right? Just as a little educational point. Gaps are always great levels of support. A lot of time price will drop down to the gap and bounce off or reverse, right? So this is a gap of up. So it might come back down and then bounce off of this. But I don't know how much strength that really has. We have another touch here. I don't really think that we're going to get much more action there. We got a lot going on, right, with the market today. I don't think we'll get there. So I'm going to bring my, prediction up a little bit here, maybe to, let's go with this level here. What I'm looking at as I'm looking left is where we might have a high that I could play off of. So this is the high I'm going to play off of here for this week's level. So looking at 574, call it 575 as the target. So we'll probably see this in the first couple days, and then after that, maybe we bounce back up back into the zone that we have here. So that's what we're looking at for QQQ. Jump right on over to the Dow Industrial Average. So the DIA is the ETF for that one. These are the blue chip stocks, as they call them, the top 30 stocks in the US. So they have quite a bit of weight as well. So the Microsofts, the Caterpillars, the Boeings, the Walmarts, these are the guys that live here. As you can see from my prediction from last week, it might look like I missed, but I did not. Okay, the DIA has been playing a very weird game with us. It's been the one that has taken the biggest hit as we look at the chart here over the last couple months compared to the other indexes that we watch. So the SPY, the QQQ, the DIA, it's taken the biggest hit of all of them. So we hit that Dow 50,000 that the politicians were raving about, and then we just came way off of it. We're nowhere close to that right now, right about 45,000. So that's a big drop. And what happened last week is this was last Friday. So it's Monday, Tuesday, before the Fed meeting. We got up here, price got all the way up here, well beyond my target of 472. Price got all the way up here. What this high was, I'm looking at 475. So, this is a very good example. Again, I think we had this similar situation a week before where we had a target to the upside. We actually hit it, and then price just reversed in a very big way. We're in a bearish market as far as it comes to the DIA, in my opinion. We've broken several lows here. There's a low there. Here's a low here that we just went right on through. We're finding now that this level here, which should have been support, is not really holding. So I've got to give it a little bit of grace because, we had a couple breaches here before we bounced off. So we're kind of getting back to that area. So that's what we're looking at here with the DIA. So DIA went up. Fed meeting came out. They held rates flat. Market didn't like that. And then we had all of what's going on with oil. And of course, these big stocks just took off. This is just another example, as I was mentioning earlier, of people just taking money out the market and fear setting in. So they're taking money out the market, keeping it to the side and waiting for their next place to jump back in, right? So what we're looking at with the DIA here, I'm gonna maybe go, this is a big move down. I mean, to be honest, we've got to catch a bounce here at some point. We haven't really seen it bounce. We've tried to do it here. This was a couple days here, that last week, and then this week again. These are a couple. We haven't really had a move up, right? So DIA, I think, is due for some recovery. You know, I want to see it happen, but maybe it doesn't happen until it drops maybe down to here first, right? So I think we're going to get a double move again, just like we did, but maybe this time in the reverse. So we have the big high volume again. So I think DIA, if I'm going to drop my line, I'm going to expect it to drop down here. I'm going to bore you with drawing the extra lines, but I'm going to slide this over a little bit. And then I think DIA comes back, retests this 457 level by the end of the week, right? So if we can close above this, then that's going to be very positive. But if we get up here and you see some wicks or long wicks coming off of this line, then, you know, look out below. We're going to get down to this gap for sure, 445, if we see that rejection of that level, right? So we're already breached it. We're going to probably come down and retest it to see if we can get back above it. So that's where I'm going with DIA. I think we're going to pretty much end up slightly up, probably flat for the week, but there is some play here to come down. If we come down and you see a pivot up, then we can probably look at investing there. Our next ETF we look at regularly is the IWM. IWM, just like with the SPY and the QQQ and my DIA, did hit the target again. So the Yardie was on point this week, and we're looking at maybe, you know, taking the IWM again a little lower. So the reason why I'm dropping this here, we can talk about these levels here, but the reason why I'm dropping this here is after the Fed meeting, the interest rates did not change. A lot of these IWM companies, they are smaller companies. The Russell 2000 is what they call the small caps, right? So small capitalization. These are smaller companies. A lot of times they need to borrow money in order to operate. They deal with a lot of debt. A lot of them are not even profitable yet. So if there's a place where the market is going to take money out of first, it's going to be these stocks, right? And in fact, when you look at this and measure this, this is in what they call correction territory, or starting to become a bear market. And that is defined as coming 10% off of the high. So we have our all-time high here. I'm going to grab my little measuring tool. And you can see, you know, we got as low as 11.5% below, and then we closed the week out under 10%, right? 10.82 was the loss from the all-time high. So we are in correction territory here. Anytime you see this, it means we're probably going to go a little bit lower before we find some kind of support. I don't think we're going to find any support in IWM. This is a longer term view, but, you know, and I could be totally wrong. But until we get down here back to the 228, maybe the 230 level, right? So for IWM, I see us coming back down to this level here. So I'm going to call it 236. So we might breach that and then maybe close above it here. Again, we've been taking a pretty big dip, just like the DIA. So I wouldn't be surprised if we get below here and bounce. As you can see, it's also found support at the 200-day moving average. But I'm not really hoping for that to hold, because as you can see, my slower moving averages, so this yellow one is my 20-day, orange one is my 50-day. These slow moving averages right now, they're rolling over. So the 20 is already pointing very strictly down. So there's a lot of pressure on price to push it down on the IWM. And then the 50 went flat. And now you can see here, if I zoom in a little bit, you probably can see it a little better, but it's starting to hinge or curve down now, right? So this one is getting ready to have a very sharp move down. And when that happens, more pressure is going to come in. People watch these moving average levels quite a bit, especially all of the computers that are trading automatically. When they see these things cross, so this is a cross here, not necessarily the def cross, but which is another technical topic we can talk about another time. But when the slower move crosses below the longer move, this is not very good, right? So, and then the longer move is now curling down. We want to pay attention to that. So I think we drop a little bit here. We might get some recovery this week. So that's why I'm a little hesitant, but I think we're going to get down to this level before we find any upside. And then we maybe come back and retest this 245 level. What I'm gonna do on this one, I could leave some of these levels on here, but I was gonna clean it up a little bit. But I kind of like this level, this dash level, because we have some touches back here, touches here, a lot of touches here. So this level is actually pretty solid for me. The chart is getting a little busy, but we're gonna clean that up maybe next week. Okay. So with that said, let's jump on over into our gold trade. Looking at the gold chart, this is gold futures that we're watching. We like to watch the gold futures because it has much less gaps. Actually, there's a gap right here I just caught with my eye. Much less gaps than watching something like the GLD, which is the gold shares. You can see there's just gaps all over this chart. Not very pretty, right? We'll clean that up a little bit here. But if we go back to our gold chart, right, our gold futures, it's a much smoother. So I like this for its better predictive nature. I'm going to get rid of this prediction. I was totally wrong on gold. I have a special coming up on gold and when we want to maybe start thinking about getting back into gold. Right now, it's not looking good. We're in a very big range, as you can see here. So what I'll do with this is actually I will clean this chart up because the range for gold right now is not these dash. It's actually this huge range so that you can see it very clearly. I'm going to even take off the moving averages there for you and zoom out. So as you can see, gold has played around in this big zone for a while. And the reason why I have such a big zone is there's not a lot of activity necessarily in the zone itself. We get a lot of sharp moves up, through, and whatnot. So we cannot find levels to really trust inside of here. We might be able to squeeze this, but again, look, it just blew right through it anyway. So we don't want to trust anything inside of here. We just want to keep these main levels now and pay attention to these. The issue that's going on with gold, and this is what I'll talk about in the next video, is that with all of what's happening with oil and everything in the market, the US dollar is getting stronger. The US dollar getting stronger. Interest rates are staying higher because the Fed last Wednesday decided to keep them higher. Makes the situation to where folks are not looking to buy gold as a safety measure because they can now go buy US treasuries because the rates are staying higher and the dollar is getting stronger. And that generates income, right? Gold is not an asset that is income generating. It's something that grows over time, right? So it builds equity over time, but it's also based off the US dollar. So if the dollar is getting stronger and you can get income for that stronger dollar, right? What you're going to do is you're going to take your money and you're going to go over and buy 10-year treasuries or 2-year treasuries, or, you know, some of the smart people will just buy the shorter term treasuries for now because perhaps this is just a temporary thing. So you're going to go put your money in treasuries. You're going to go and collect whatever cash you can collect today, because now cash becomes king. The dollar is stronger. You can then use that cash later to invest, right? So that's why gold has been dropping here. And I'm going to go into very big detail. That was a pretty detailed explanation, but I'm going to go into the nitty gritty of it, show you some other charts in the next video. So stay tuned for that. Like, subscribe. Make sure you mash the notification button so you know when that video does drop. So gold again, gold levels, just real quick before I jump over to silver, is 43.98. So we're looking at 4,400 for gold here. You can see in the past, this was an area where price came up and rejected off of it. So what was prior resistance becomes prior support. You can see we kind of had some support here, and we're heading towards that support again here. So not quite ready to jump back into gold yet. We got to see how this crude oil situation goes, strength of the dollar, a couple other things. So again, stay tuned for the next video. Silver, very similar story, right? So we're going to clean this chart up quite a bit. We're going to keep our high up there. Silver is actually in a lot more pain than the gold. We'll take our prediction off because we were wrong there. And you can see here that, you know, we break through and we really have, you know, we had some good volume or high volume towards the downside here, kind of pause a little bit. Maybe we go a little sideways, but I do think silver was going to drop a little bit more. Support level may be right back around here at 63 level. But, you know, we could see here we have a good top here down at 53. So I wouldn't be surprised if we drop down all the way to 53. I'm going to actually mark that here on the chart so we can keep track of that. Go ahead and make that my nice yellow. Solid, right? So we're going to watch. That's the next level for silver. If we get down here for silver, you start to see a bounce. Might be a time to maybe add to your silver position if that's something you're trading. I like silver, but you know, right now it's in a downtrend. We have to pay attention to this downward move. If we turn on our moving averages like we were talking about before with IWM, you can see here we crossed the slower, the 20-day crossed over, and it's turning down and it's turning down. So we have to pay attention to this. This is where the trend is starting to change on us. So we have to pay attention to where we're going to find support. It could totally be right here at this 200-day moving average, my green line, or just below that here at 53. So I wouldn't be necessarily gung-ho to buy silver right now, but I'm going to pay attention and watch to see if we get to those levels, okay? The next thing we're looking at here, jumping into our crypto chat. Crypto, there's a lot of news going on right now. So there's this thing called the Clarity Act that has been bouncing around in Congress and between the agencies that manage currencies and also the SEC. So the CFTC deals with currency exchange, so Forex and the rules around that, which Bitcoin has traditionally fell under, and then SEC is having some rules. So they're trying to come together, make more plain rules so that it's very obvious what's legal and allowed versus what is not, right? So they're trying to put some regulation around crypto. I said before, like crypto has been faking people out here. We've gone up, hit this 74 levels, above 75,000. You know, that's where you're going to probably want to start thinking again. But this is all news driven. All of this green that you see here was news driven. The news has kind of died off, so now we're pulling right back into our range. Again, nothing to do with crypto at this point. We're just sitting here in the middle of the range. Actually, the weekend has just been even worse coming in from Friday, right? So Friday we dipped back, or Thursday we dipped back into the range, and Friday we stayed in there. And then this weekend we're getting on back down to the lower levels here. So nothing to do with crypto. Bitcoin is just kind of sitting back in this range that we've been talking about for the last probably 4 weeks now. And that's where it is. Ethereum, same thing. All this news driven, sell the news, as they say, right? Sell the news is a thing they say as traders in the market. Once the news hits, then there's no more buying. Like you want to kind of pay attention and know when that's coming. But once it's in the news, once it's on CNBC or in the Wall Street Journal, the move is already done, right? So you're chasing at that point, and those that have been in it are going to sell it to you as the sucker. So you're going to become your bag holder, and you want to pay attention and not get caught with that. So they sell the news quite often. In this case, they did again. Back into our range. Nothing much for us to do here with Ethereum. Okay. All right. So XRP, same story. Not going to jump too much into it. I think that's all we have here for the week. So have a great week. Pay attention to your levels. Watch what's happening. I think we're going to see a little weakness to start off the week, Monday, Tuesday, and then we might get a little bounce because we've been in quite a bit of pain for quite a long time. The VIX is very high still. That VIX might drop down. I think VIX is going to stick in the mid-20s for the next couple of months. And if it does so, then we're not going to go much higher than we're doing right now. So the bottom, I don't believe, is in yet, but we'll find out again next week. Stay tuned. Make sure you like, subscribe, mash the notification button so that when this drops next week, you know that it's ready and you can come and reset your levels and figure out where we're going for the week following that. Thank you for watching. I'm the Wall Street Yardie. Have a good one.